Morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 23rd of the 1st, 25. My name is Richard Lee and I made the stockradar.com.au website for you. Well, welcome everybody. Catching the wave is not just good analysis, it is a discipline. Okay, I'm all about trending, that's what I try and do. What do we know and what don't we? Okay, what we do know, some stocks will trend strongly, but we don't know which ones. We think we know which ones will do it, the brighter stars, but often they flop, and many we don't think will take off, actually do. It's a bit of a mystery, this. So we play the numbers game to get the most consistent and reliable outcome. Generally, a random, scattergun or unplanned approach may catch a few, but to give yourself the best chance, knowing what we know from the above, an emotional, systematic process of trading stocks will generate the optimum outcome. That's why we control the stocks we cover, we control the stocks we hold in our portfolio, and repetitively take our defined signals and stops to generate our returns unemotionally. It is a discipline. I'm going to talk more about this in trading tactics, but this is the core of what Stockradar is about. Process-driven trending, focusing on trends. Okay? So we're going to go through the top 10 today and have a good look at those. Firstly, what we've got here is, these are the top 10 ratings at the moment. So we've got Ansell, which has been doing very nicely indeed. Breville Group was a new entry again. Capricorn's been doing very well. Evolution, as is Genesis and also now Gold Road. So a little bit of the mining sector there. IAG is making new all-time highs. Amazing. Origin just keeps trending higher and higher and higher and is making new highs. RRL, Regis Resources, is a new coverage for me this year, and it started off doing very well. And you can see here in the chart, we've had a big downtrend, we've had a big accumulation pattern there, and now we're starting to break out of this accumulation pattern and move into a trending phase. And that's quite exciting for me. We've had all the conditions here for a break, good volume, good momentum, everything looks nice there. So that's one of the defined signals we take, and we simply follow that with our stop until we get told to get out. Okay, how we do it. And the other one, of course, is Telex Pharmaceuticals, which is generating over 100% return now for us, and it's been amazing. So that is our top 10 of the 55 stock picks that we cover. The stock pick count is flat at 55, so we're really not, still a whole heap of stocks that aren't doing much, but of those 55, they're currently generating for me about 22% return. Okay, and you can annualise it out at about 50%. Okay, so the top stocks are doing very, very, very nicely indeed. Those 42 stock picks of 158 stocks covered, and we've got 13 ETFs of 26 ETFs covered. So that's how the breakup goes of the 55 there, 42 stock picks and 13 ETFs. Okay, so now probably what I want to do is I'm just going to go through the top 10 and just to give you a rough idea of how they're returning there. So Ansell's up about 32%, Breville Group's up about 4%, Capricorn up 38%, Evolution Gold up 42%, Genesis up 64%, Gold Road up 20% already, IAG is up 62%, Origin up 1%, Regis Resources up 4%, and Telex Pharmaceuticals up 113%. So that's those top 10 there, and that's what they're returning, and they're doing very nicely indeed. 55 picks from 184, okay? So now, what I'm going to go through is some overseas markets. There's one special mention I wanted to make to you today, which is JB Hi-Fi. Closed above $100 yesterday. We finally got there. Amazing stock. It was $60 probably in July this year. It's now over $100. Just an amazing performance. But there you have it. This happens all the time, and you can see all these stocks that have been doing it. So it's a matter of knowing how to catch that wave, the best way to do it. And I'm going to try and help you a bit today, understand, because there's probably a lot more stocks going to come onto the board yet, because there's so many that aren't in there. So anyway, I'll talk about this a bit more. But first thing I want to go through is the overseas market. So firstly, let's have a look at the Dow Jones. And amazingly enough, the markets have just bounced back again in no uncertain terms. We've had a big selling challenge here over the last month or two, but the market's rallying again. Now, it's not at the highs yet, so we've still got a bit of work to do yet, but it's also, the buyers are looking pretty resilient here in the Dow there. Okay, the Nasdaq, well, it's really, I think, actually made a new high. It's right on the high. We've had a bit of selling here, but the buyers have returned in this, and it's looking pretty good again. And the same with the S&P. It's up and it's making highs at the moment. It's held the support pretty well. We had the selling challenge here and it's back up again. So those indices are looking fine and ready to test their highs, which they're doing right now. And as our market is doing at the moment, testing its highs up around 8,500 points. But it's looking very good. So we've got the higher low trend here. There's no real problem with this. It's come back to the average, bounced off it. Momentum's still strong, flattens off during corrective periods. That's fine. Still well above zero. So the ASX 200 for me looks fine, driven by a fairly small group of stocks, but still looks okay. Okay, so we've got the commodities now. And gold looks fine. Again, another one testing new highs. So really not a lot's changed over the last month or so. So we've got some of these gold stocks, and of course we've got the Australian dollar, which has been dumping, which has really leveraged those gold stocks. We have a few, not a lot, but we do have a few, so we've got a little bit of exposure there. Copper, well, it's just bouncing up again off a bit of a support level. Nothing really that happy about there. Nothing really on the volume or the momentum front there. So it's just chopping about. Brent crude is also trying to rally. Hasn't really got much yet. We saw some buying there, but hasn't been able to break any resistances yet. Same situation we saw last week. Okay, so that's the overseas markets. Now I want to go through some Australian stocks. So we're all about finding the right stocks, looking for opportunities, but also protecting what we've got. We've got some really good winners in here, and we've got to make sure that those profits are protected and we don't see them disappear, which can happen very easily if we don't work with a stop to help us. Okay, it's really important. So this week, I checked on the top 10 stocks, why we selected them and why they're here now. I'm going to go through those this week on some of our stocks here. Some new, some old, some winners, some starting potential trend moves, all in different situations, which we've got to manage carefully. Okay. So last week we looked at a pretty good group of stocks. We looked at ResMed, which is looking pretty interesting again this week. AGL also. Telstra's just fallen flat. Qantas is okay. CPU and JBH all doing well. Coles is really testing those highs there. And we looked at a couple of small stocks, Select Harvest and TPW, which haven't done much already, but still that's the way it is. Now I just want to talk a little bit about the numbers game in my portfolios and how Stockradar works, because it really is that numbers game, how we play this repetitive process all the time. So if I look at my 55 stock picks at the moment, or 42 of them, we have 15 of those stock picks generating greater than 20%, which means about every 3.6 stocks is generating greater than 20%. So on a 10 stock portfolio, you are likely to get at least of those two big trenders in your portfolio, if not possibly three. Okay, and a 5 stock portfolio, which is my biggest portfolio, you're likely to get 1 and quite possibly 2. The current stocks we hold are PME, IAG and Ben, so we actually in fact have got 2 generating plus 20%. So this numbers game works quite well. But we just got to sort of make sure that we have the discipline to follow these things. So I'm just breaking down what I do into some numbers for you so I can get an idea of some returns. So all the entry levels on the charts, I don't show all the entries and exits. That's all the domain of my members. So if you want to go and see what my entry levels are, where the stops are on these, you can all go to the trading centre, and all those things are there in highlighted for you to have a look at. Okay, there are lots more interesting stocks hitting the radar in our trading centre besides one I'm going to show you. We help you find trends, new highs, trend reversals, and show you where to set our stops. That is the Trading Centre, my flagship page. Okay, so let's go through a few stocks, these top 10 stocks that we were looking at, and see what we can see. Okay, so firstly we've got Ansell, which is trending up quite nicely. We've got some resistance back here. Let me just shrink this up a little bit. Okay, so you can see here where we are. We've got the highs up here, the moving through the trend reversal here we had down here, where we entered somewhere down here. It's gone through a high here, an important high here, and is continuing on nicely. So Ansell looks very good to me at the moment. There's no real problem with the trend. Trend intensity rating is 10. You can see some very nice volume has been going through here, plus momentum is positive. So you can read what you'd like into this about momentum, but to me, when it goes flat like this, it tells me that the uptrend is steady. The acceleration is not positive or negative, it is steady. So the rise is steady. So if it's above zero and flat, then the rise is steady, and that's what the momentum index tells me, which is fantastic news, and that's why we've got a trend intensity rating of 10 on Ansell. Okay. All these stocks are protected with stops. Okay, so I've stops protecting all the profits here at this stage. Where the stops are, you have to go to the trading centre to have a look at those, but they're all there and they will follow a trend high all the time, so that I am always going to be protected. Okay, Breville Group, a new entry. We've had a couple of shots at this one. It did break to new highs and we got stopped out there. But again, our strategy is if we see a new high, we fold again. It's about taking those signals all the time on the stocks that you cover. So that's why you don't cover a million stocks. You cover a smaller group of stocks that you can manage. So with Breville, it's made a new high. It's looking good. It's continuing this fairly steady trend that's been in place for quite some time. Okay, we started covering this one probably last year. So we weren't in this for this whole trend, but you can just see what has happened here, and it's making new highs. And when you see these sorts of charts, it really is a flashing light saying this stock wants to go higher. Okay, so the new high in Breville looks very good. We've got some very good volume pushing through here, and momentum again is good. Upside momentum is positive, so that looks good. Our next one, Capricorn Metals, slightly sort of shorter time frames here, but we've got the all-time high here, which broke up here. Back in sort of March last year. It continued higher. It stopped, didn't go off here. It's now run through higher here, and it's now up at around 750, generating 10 intensity rating of +10, with some very good profits in here. So once I'm in a trade, the analysis really goes out the window for me, and it really is risk management, which is the most important. Okay, so analysis gets me into the trade, and risk management manages the trade. Okay, manage it much better than I can do analysis. Okay, and that's just a fact of life. And I've been analysing charts for 50 years. So there you go. As Capricorn Metals, give you an idea of how old I am. Trend intensity rating is +10 here for Capricorn, doing well. These small miners, I don't know why, but they've just taken off. And luckily we've got into a few of those because we don't have a lot of those. But you can see also here some nice green bars here. The volume and momentum's been fantastic here, kicking higher again. So that's Capricorn Metals, a nice little runner. How do we get these stocks? Well, you take the signals early. You often take the signals when sentiment is not so happy, which is often why we don't take them, because we might be a bit nervous. But you've got to see through all that sort of crap and just take the signals as they are presented, because the market will know better than you know. Okay, Evolution Mining. Okay, we've held this one for a little while now against a Goldie, which always freaks me out a little bit, but it's going well. And we can just see here, if I just blow this up a little bit, you can just see some nice volumes, nice steady volumes come through here. So it's been quite good. It's a bit mixed. We've had a bit of a holiday lull and a lot of stocks on the volume side, so we've got a little bit careful about what's happening now. But all else is good. It's above the average. Momentum is good. Volume's okay. And we've got a higher high here, and it's just making higher highs at the moment. So we just raise our stop and keep locking this profit in. We are in a trend. Okay? So that's Evolution. Number 4. Number 5 is Genesis Minerals. Okay, Genesis Minerals also made a new high back here in, say, March, same time as Capricorn roughly. And now we've got this high. It's just continued on. It delayed about for a couple of months, and it can happen, and it can frustrate the hell out of you, but you've got to be patient. Patience is one of the most important attributes of a good trader. Being patient, let it happen. Not feel like you've got to do something all the time, okay? Because you don't have to. Just let it happen. And when here it has, let it happen, and it's just continued high. It's gone from $2 to over $3 in a pretty short period of time this year. So it looks pretty good. Steady uptrend of high highs and high lows. 10 intensity rating is 10. Volume is good. Let me just squeeze this up a little bit so you can have a little bit better of a look at it. It's quite good, all this demand that's been coming through this big rally since we made the new highs. And momentum has just been a nice little steady rise up here, which is looking very strong still. Okay, so that's Genesis Minerals. It's amazing how good these stocks can be looking. But anyway, here's Gold Road Resources, another one which had a good breakout back here. We'll just wind this up. We're looking at here. We don't worry about too much about the history. We're worried about what's happening now. And here we've got Gold Road Resources, which performed a little trend reversal here. And then broke above a high here, and now it's continuing high in a trend. As gold goes up and Australian dollar goes down, our gold stocks go up. So Gold Road Resources is rating 10. It's above the average. Volume is quite good, and momentum is fantastic on Gold Road Resources. So that one's also a good one. Our old favourite, Insurance Australia, and I don't know where this trend is going to stop, but it's certainly not stopping yet. The old highs haven't been able to stop it, which is where we are here, up around the old highs here. We've come through here. We tightened the stop as it dallied around a bit here. We pushed it right up to here, and now it's pushed higher again. So where this is going to go, this is starting to look like a new all-time high, which is very, very impressive for Insurance Australia. And we know some of the other insurers are doing well. QBE is doing pretty well. So we can see all this beautiful volume going through here. We can see all this fantastic momentum, which is strong. It's above the average. All those things are there to give me a trend intensity rating of 10. So the question I ask you now, why would you sell this stock? Okay, you wouldn't. You would just simply raise your stop. Okay, so don't worry too much about things. Don't worry, don't doubt, just do. Okay, so that's Insurance Australia, and it has surprised us every time it's gone through. It surprised us down here because it was such a dull and boring stock, but it just continues to rise, and is now making new highs. And it's now at $8.83, and it was around $4, back here in mid-23, this sort of thing. So it's done very, very well indeed, and it hasn't stopped yet. Again, why we use the trailing stop. Origin Energy, we've just re-entered this one. It's had a bit of a bumpy ride, but generally it's been in an upward phase for quite some time. We try and take the trend moves. We try and get out when the market goes sideways because it frustrates the hell out of me. But we've now got a new high here, which we've taken, and Origin is steadily working its way higher and higher and higher. The prevailing trend is up. So we've got a bit of volume here, not a lot because we had a bit of low day, but we've got good momentum. It's above the average, and price triggered it. So, excuse me. We have got a trend intensity rating of 10, which leaves no doubt in my mind as to how to handle this stock. Okay, so that's Origin Energy. The next one, number 9, was Regis Resources, which we saw the chart of briefly back there in the top 10. But we can see here what it's doing. It's a beautiful accumulation phase down here. It's now broken out of it. It's pulled back. It's pulled back to the support line and rallied off there quite nicely. That's all very, for a gold stock, it's all very classical, which is a bit scary sometimes, but that's just the way it is. We can't do much about that because gold stocks can be some funny things. But Regis Resources, and I pointed to this for a while, because it hasn't really responded to gold quite the same way as the other stocks previously, it really was just developing this accumulation pattern down here, which has been a really nice pattern to break out of and to put a base below it. And charting talk, it's a very strong chart, and it's looking very good. So Regis Resources is a little stock, little gold stock that's now creating some classic charting patterns. It's rallying high, the price is moving in higher highs and higher lows. It's above the moving average, volume has been good, and momentum is positive. So again, trend intensity rating plus 10, no doubt to what you do with this stock. Okay. So all the top 10 stocks are all slightly in different positions, and this one's in a slightly different position again, because this has been a huge stock, this one here. And again, it's one of these stocks, I think I mentioned to you at the start of this what we do know and what we don't. We do know some stocks will trend strongly, but we don't know which ones. And in this situation here, I never knew Telix Pharmaceuticals, which was $12 at the start of 24, is now going to be $26 later on at the start of 25. So in 12 months, it's gone up enormously, over 100%. So Telix Pharmaceuticals is a good one. And again, it's not a matter of saying, well, I've got a good profit here, 113%, whatever it is. I'm now going to take my profit and run, put it in the bank. You can do that if you like, but if as a trader, you must maximise your returns. So we could maximise this out a lot further yet, because there will be losses along the way that we're going to take. And we had a couple of tough years here a while ago. So when the sun shines, you've really got to make hay, and that's really what it's all about. So Telix Pharmaceuticals will just raise our stop and let this one run as far as it wants to run on. Okay, so that's the stocks. That's the top 10 stocks for you. A bit of a mixed bunch. And again, the other stocks in there on Stockradar, trend intensity, the other stock picks, there's a mixed bunch there, some starting, some with big trends. It could be JB Hi-Fi, could be all sorts of different stocks that have run on well, and some new entries which we've got. Haven't had a lot of new entries recently, which has been a bit of a concern. But that's really not, it's a small thing for me at this stage. Okay, now, what I want to do is get onto some slides. I want to talk to you a little bit about my portfolios and how I run them, okay? So really what my focus is, I don't worry about other stocks. I really just focus on the trends. So there's 42 stocks that are trending out of the 158 that I cover, stocks. So I don't worry about the other stocks. I focus on the trends, and that's what I do. It's all I'm interested in. Stocks going down, don't interest me one little bit, okay? So don't worry about the market. It'll do what it wants to do. Control what you can, which is yourself. Okay, you do what you're supposed to do, and you will find things will work out quite well. Okay, so let's go to some slides now. Firstly, I just want to show you on the landing page of Stockradar, you'll see there is a chart there of 5 portfolios that have therefore to have a look at, just to give you a bit of comparison, give you an idea of performance. So I started doing this in 2003 with $200,000. Okay, with a 5-stock portfolio, you can see there in the blue line, it's now generating 16.8 CAGR over that 25-year period, or 22-year period, I should say. Okay, but the interesting thing is we had a couple of tough years there, you can see, where we had to try and conserve as much capital as we can. But now, with the way the market is, this portfolio has just taken off. And that's the way it works. And I think I mumbled on, banged on about this while the markets were correcting a couple of years ago. Sooner or later, this market will get back on its bike and will start going higher, and that's surely what it's done. And we get the leverage effect with our portfolios, which is what we do. So the 5-stock portfolio is going through the roof at the moment and doing very well. The next one you see there in the yellow line is the 5-stock mid-cap portfolio. So I'm looking at the mid-cap stocks here, which is 50 to 100. And it's also done very, very nicely indeed. Okay, it's generating 14.5 CAGR over 22 years. Then there's a 10-stock top 100. So this is like the top 100 5-stock. Now got the top 100 10-stock in the red there, making new highs, looking fantastic, generating 12.8% compound annual growth rate. Okay, then below that we have a conservative portfolio, which is a much steadier portfolio. What I do is I'm going to talk to you a bit about what it is in a minute, but it's a very steady portfolio. It covers some leading stocks, and it just generally trends high. It's having a little bit of a wave at the moment as the market takes off, as some of those leading stocks kick on, but it's a very nice portfolio, and it's generating 11% CAGR over that 22-year period, which is not to be sneezed at. And the accumulation index, the actual ASX accumulation index, which includes dividends, which I benchmark myself against, it's running at currently about 9% over that 22-year period. So all our portfolios outperform because we know how to catch the waves, because we follow our signals. We don't know which ones are going to do it, which ones aren't. We just take the signals and do what we're told. Okay, and that's how we've generated those returns. Okay, so you can start your own portfolio with Stockradar as new stocks become, or you can build your own portfolio. There are different ways of doing it, and I'm happy to talk to you about that on the phone. You can also follow a Stockradar portfolio. You can follow an Energizer or a conservative portfolio. Okay, you can follow one of those. Okay, the conservative portfolio I mentioned to you before, what is it? Draws from a data universe of 20 diverse leading stocks, okay, across the board. So we'll probably one in some sectors, it'll be two in a couple of sectors, but it will be across the board and they'll all be leading stocks, okay? We can hold up to 10 stocks at any one time. So we've got a 20 stock universe and we can hold up to 10 stocks at any one time. Currently, I've got 9 stocks. And currently, I'm holding AAG, Goodman Group, JB Hi-Fi, Aristocrat, CBA, CPU, Qantas, Brambles, ASX. And we're wondering why it's doing so well, because some of those stocks are doing brilliantly at the moment. So that's loaded up nicely. We've got one spot left there to go to our 10, but really we're almost full there on the conservative portfolio. So that's a fairly simple, basic portfolio, just using 20 leading stocks, fairly safe. And as you can see from the chart, it's very, very steady and doesn't come down very often. The 5-stock portfolio is more volatile because it's a 5-stock portfolio, but it is the best performer. Most volatile, but best performer. And the conservative in the green line is a very, very steady one. Just about how we do it, we leverage a lot more the Energizer portfolio. So the Energizer portfolio, I draw from a data universe of 100 stocks, not 20 like the conservative, but 100 stocks for the Energizer. We also run a 5 and a 10 stock. So out of those 100 stocks, I have a 5-stock portfolio and a 10-stock portfolio. You can choose to start your own portfolio or you can follow one of our portfolios. It's up to you. Currently in my Energizer portfolios at the moment, the 5-stock holds 3 stocks, Promedicus, IAG and Bendigo. There are 2 parts in cash. So when I have my portfolio of $100,000 and I start my buying, if it's a 5-stock portfolio, I will break that up into 5 slots of $20,000 each. So with my 5-stock at the moment, I've currently got $60,000 in PME, IAG and Ben, and I've got $40,000 in cash, roughly. Not so much because the prices will change those values, but you get my idea of how I break that up and how I know what my buy allocation will be. The 10 stock currently holds 7 stocks, PME, IAG, Bendigo, 7 Group, Computershare, Xero and QBE. A couple of those last ones and there are recent ones, and the 3 parts in cash there. So that gives you an idea of the 5 and the 10 stocks and how they work, okay, and how the conservative differs from the Energizer, okay. Energizer portfolio is due to the size of the data universe, which is 100 stocks, and the small holdings, 5 or 10 stock. These portfolios are generally full. Now, why they're not full at the moment, I'm not too sure. We just haven't had any recent entries over the last couple of weeks, so it makes me a little bit wary, but I'm not too concerned. They're still generating good profits. But the important thing is you can see the leverage I get is 100 stocks I've got to choose from, and if there are 5 or 10 stocks, then generally they're going to be full, because there's generally going to be 5 or 10 stock picks out of that 100. So those portfolios are generally full. Our portfolios perform best when stocks are trending. Stocks don't trend all the time, but the long-term trend of the market is up. So eventually it always returns to a trend, but we do have corrective phases that we have to work with. And in those sorts of stages, we are conserving our capital as best as we can. Okay? But when these times happen, this is when we make our money. There are other filters that control such things as stock selection, capital allocation, entry and exit times. This you will learn as a portfolio. As you come on board, in the first year or so, I take you through a process of how I run the portfolios, how you manage all those things. There are questions that come up all the time about what should I do this, should I do that. All those questions need to be answered before you even think about it. So you've got to have definition for all those sorts of things as to what you're going to do in a certain situation. Okay? And that's what we've done at Stockradar. We've set that portfolio up. Okay, so just to run through you briefly, the portfolio is low cost, it is safe because we work with good risk management, simple to understand and very easy to manage. Okay, it's a simple process subscribing to the portfolio service. You simply sign up to the portfolio service, you simply choose a portfolio that you want, you will receive some weekly email from me with any entries or exits from your portfolio, and then you get started. It takes you about 15 minutes a week to do, and that's the idea. There's not a lot of poring over charts and things like that in my world. I just take the signals, I can see what's going on, and it's either yes or no, and that's how I work. Okay, so that's how I catch the wave on these stocks and how I do it. It's not through being smart, it's just a discipline and having a process to follow. Okay. So that's what we do, and as I said before, don't worry about the market. It'll do what it wants to do, or control what you can yourself. And again, remember, I trade stocks, not the market. So stocks can, different stocks at different times will be rising and falling, not so much as the market, because our market, the ASX 200, is probably 30% dominated by the banks at the moment, even more by a couple of other stocks as well. So you know how I feel about that. So what's happening at Stockradar? The Radar newsletter, the next one is out at the end of January. I'm going to be looking at the energy stocks this time. Is it an interesting time? I don't really know. And in Radar's rant, I ask why sometimes we have a hard time adjusting to the factual realities, even though we know them to be true. Okay? I'll talk a little bit about that because we have a little bit of a mismatch here sometimes when we're trading stocks. If you want to trade stocks, you've got to do it properly. Okay, you can subscribe to my blog, you can take a free trial, you get complete access to the trading centre which monitors all your stocks, and you can set up your own little watch list there under my portfolio area. Okay, so that's about all I've got for you today. When markets are hot, we need to learn how to ride the wave and get on board early. Signals, we need to listen to them. Okay, often they occur when the signals will come around when the market's not quite, the market sentiment hasn't kicked in yet. Market sentiment doesn't kick in until you get your third wave or whatever it is, or you're halfway through your trend and people suddenly say, well, I might get on board. But if you can get into those early signals, you'll get the Genesis, you'll get the Capricorns, you'll get the Gold Roads, you'll get the Insurance Australia. Those stocks is what we want to get. Telix Pharmaceuticals, things like that. Trends usually go on further than we expect. Telix Pharmaceuticals, IAG, perfect example. And they usually correct when we least expect. Tough. Why we have stops. Okay, so we don't wait for the market to plummet down and say, oh God, I've got to get out now. If the stop goes off, I get out. And often the stop will go off when the market's not really dumping as yet. So it's important to have that. So put that thought aside because you will never actually get it right yourself. You need to have the discipline of a stop in place. Often we get on emotionally too late and get off emotionally too late. So we're always too late when we're doing our signals, which is why we need to have a process-driven, different sort of action base there. Okay, so a good trading strategy simply switches on when stocks burst and switches off when risk elevates. Let the market do what it will. It matters little to me. I will just do what I do. Okay, I just follow my rules and follow the system that I have. Okay. So I'll just give you an example of what I do. Follow me, give me a call, whatever you like to do. but hopefully you will get on board. Hopefully you are on board. I know a lot of my members are on board with a lot of these stocks. It's a real careful management. All this stock market's not an easy game to some extent. You've got to be careful, but if you have those rules, have those processes, all of a sudden it becomes a lot easier. Okay, so a bit of a lengthy one today, but I hope you've had a little good idea of what I'm doing and why I do it. So remember, always watch your trends, heed your stops, keep it simple, have fun, and most of all, stay safe. So I'll see you all next week. Thank you very much.